Hello and welcome along to the Property Academy podcast by Omas Partners. I'm your host, Steve McKnight.
And I'm Andrew Nicol.
And tell Joe, we're talking about the OCR. Now, the OCR came out about a week and a half ago, and so we've had a bit of time to digest it. And what was really interesting is the Reserve Bank left the OCR at like 5.5%, Andrew, and I don't think that surprised anyone in the country at all. We all pretty much knew that was going to happen. But the real action was in the forecasts, because as part of this, every 3 months, the Reserve Bank released new forecasts about where they think interest rates are going to go, what they think is going to happen to inflation, and what they think is going to happen to house prices. So we are going to dig through all of that today, because we already know that the OCR is 5.5%, but what we really want to know is, well, what is coming next? So, Andrew, what do you think the main takeaways are for property investors?
So the biggest thing is that inflation is really sticking around longer than they expected it would be. And so they're still predicting, the Reserve Bank is still forecasting that they're likely to get between 1% and 3%, which is the desired band, the target band that they're trying to get to by September this year.
But it's going to be bang on 3%, right?
Yeah, so while it achieves what they're wanting to achieve, they're not going to be in that mid-range, that kind of 2% until far later next year. Is that right?
Yeah, about mid-2025, 2026, which, to be fair, is roughly what they thought 3 months ago, but they really think over the next year, inflation might not fall as fast as what they previously forecast. And of course, what's the Reserve Bank trying to do? They're trying to get inflation back between 1% to 3%. So if inflation's a little bit higher, well, that's not going to be good.
Yeah, so if it hovers at that 3, it kind of could go either way. So they're not going to be reducing the OCR anytime soon, right?
And what the Reserve Bank have done is they've actually pushed out their OCR forecast. And what I mean by that is previously they thought that the dips in the OCR would come kind of at the start of 2025. We might start to see some cutting then. Now they're saying, oh, we might cut a little bit, but the big cuts probably won't happen until late 2025. So they've kind of pushed out their interest rate cuts by about 6 months. Now, a lot of this is actually just signaling to the market, saying, hey, look, inflation data came out. We were really unhappy with that inflation data, and therefore, if nothing else changes, we think that we're going to keep the OCR higher for longer. Now, if you talk to a lot of economists, many of them say, look, we expect some interest rate cuts before that, but the Reserve Bank is trying to say to the market, don't start cutting interest rates too early, because if you cut interest rates too early, then we're going to create more inflation, we're going to create more spending, we're not going to like that, and that means we're going to have to be tougher for longer. So some of this is more than what's called jawboning, telling them what they want the market to hear, rather than what the market wants to hear. I was speaking to Tony Alexander. He thinks that there might be an OCR cut later this year and then a couple earlier next year. That's not currently in the Reserve Bank's forecast, but I've got some other economist predictions to share with you shortly. But does that mean, Andrew, that there's still no chance that the OCR is going to go up and that it's all downwards from here?
It certainly doesn't mean that there's no chance. I think the Reserve Bank has been pretty clear with saying that there might be an increase, but it's probably unlikely. I don't think any economists think that it's likely. But
well, actually, the Reserve Bank talked about increasing it at the last meeting.
Really?
Yeah, so that was on the table about should we increase it. Now, of course, they're talking about all options some of the time. I'm sure they would have had a quick discussion about, well, should we decrease it as well? But they'll say, well, we talked more about increasing it than decreasing it, obviously. And if you look at their change in forecasts, they have kind of upgraded the chance of seeing some sort of increase. So their previous forecast kind of implied a 40% chance that the OCR might go up. Their current forecast, their new forecast, kind of implies a 60% chance that the OCR might go up. Now, these kinds of percentages, again, it's more signaling rather than roll the dice a couple of times and more often than not, an increase comes up. But we'll say the Reserve Bank is saying we are now more likely to increase rates one more time compared to what we were last 3 months ago.
And actually, we did see a change in the swap rate or the wholesale rate directly after this as well.
Oh, you see changes in the wholesale rate constantly, Andrew. I probably wouldn't worry too much about that.
So what do economists actually think the OCR is going to do?
Well, I was speaking to Kelly Eckold from Westpac. He's their chief economist there. And I actually quite like, this is like the most nerdy thing.
Yeah, I'm waiting.
But like ever since Kelly Eckold took over Westpac's economics unit, I've actually been really enjoying their forecasts and like economic commentary. Anyway, I said to him, well, why are you laughing
I'm just
at that?
thinking, I wonder if Kelly's going to be listening to this being like, oh, thank you, Ed. Thank you, Ed.
Not
Can't
that,
wait
Kelly.
to see you at the next economic get-together.
Drinks are on me. And we were asking him, what do you think the OCR is going to do again? And he say, look, if domestic inflation goes up between now and the end of the year, then we can probably expect the OCR to go up one more time. And he was actually saying that, even if domestic inflation goes up, and it's pretty sticky, it's coming down, but it's not going down as fast as the Reserve Bank or me wants it to. Like, I'd love inflation to be 2% because then the interest rates can come down and my mortgage interest rate will go down and it'll save me a lot of money. But he was saying even if domestic inflation stays the same or goes up a little bit, the Reserve Bank might not even increase the OCR because it's already in a really restrictive position where it's holding the economy back. And I was saying, well, what would it take for the OCR to go up then? And he was saying, well, if demand in our economy really goes up, spending goes up, if inflation starts to go up, you could expect to see an OCR increase.
So demand, will that come from the net migrants?
Well, a big thing that could possibly happen is what's happening in the government's budget. Now, by the time this is released, the budget will have already been released, right? And it's all about, okay, the government's saying they're going to give us some tax cuts, but how are they going to pay for it? So if they borrow more money than they previously planned to, then that will inject demand into the economy. Spending will go up and inflation will go up.
Right.
If they instead say, we're going to give you tax cuts, but actually we are going to cut spending in a whole heap of ways. In fact, we are going to cut spending by more than the tax cuts. Well, then demand will go down because they're really cutting back on spending, in which case inflation could fall faster. The other big thing that we're going to start looking at, and again, I'll have another video out about this once we've had the chance to look at the budget, it also depends on when those cuts come. So if they give us tax cuts straight away and they say, we're going to pay for it by these other spending cuts, but we're not going to cut it for another year, well, then we can already see demand going up this year. Yep, demand might come down next year, but that could create inflation straight away. So it's not just the relative cuts, it's the sequencing of them as well, and when they actually happen.
Okay, so potentially the budget might have more of an impact on where the OCR goes than many other things.
Yeah. Now, Andrew, let's jump to house prices. What does the Reserve Bank think is going to happen to house prices?
Yeah, now they've said that they assume that annual house price increase inflation is going to return gradually to its 5% long run average.
Well, that's good because that's what we've been saying on the podcast for about the last 5 years.
Yeah, so if you're doing your forecasting and you think 5% is a sensible growth rate, so does the Reserve Bank.
Now, what do they think is going to happen in terms of 2024 compared to what they thought 3 months ago? To be fair, that doesn't really impact anybody who's making a purchasing decision today because most of 2024 is probably gone. If you're looking at a property now, you're probably not going to end up going unconditional till maybe July. By the time you get there, most of 2024 is gone. What's interesting is they've downgraded that 2024 forecast, but they're saying once we get into 2025, 2026, we expect that house prices will increase faster than we thought. And it's probably just down to interest rates, right? They're saying, look, we're probably going to bring interest rates down a little bit sooner. Because we haven't done that, we're seeing not much house price growth. When we do eventually do it, we'll see some of that catch-up growth. Yeah. And that's probably what they're seeing. Anything else you're picking up here?
No, but I do think it's quite important to point out that not everywhere is going to go up at that 5%. You might have areas that have price reductions. You might have other areas where you might get stronger growth. So this is just the overall market. So you'll see that a lot of headlines about this over the next wee while.
Yeah, that's true. And the other thing that I was just writing, I write these property market reports for every region in the country, including like small ones like Gisborne, West Coast, Tasman, Marlborough. I dig into all of the data. And it was amazing that some places like Southland is going real strong at the moment. Do you know in the month of April, Southland property prices went up 2%.
Really?
Nationally, property prices fell by 0.8%. So the Southland property market is going pretty strong, or at least was strong, particularly in April. And we're seeing house price increases in Otago. I think year on year, they're up about 5 or 6%, same in the Canterbury region. And so you're seeing some pretty decent house price growth, even though some places like Auckland is like pretty much flat over the last year. So there is a lot of variation. And I think the big question on everybody's mind is, well, okay, this is all well and good, Ed and Andrew, but when will my mortgage interest rate go down? That's what I really, really care about. And the main thing that I'd say is they are already going down a little bit. So even if I think about last week, Kiwi Bank, or it might have been 2 weeks ago now, Kiwi Bank cut their 1 year rate from 7.25% down to 6.99%.
It's a big jump.
Like we are seeing some decreases. And in fact, you can actually keep up to them. If you Google like interest rate changes and then OPAs, the first thing that comes up are my latest interest rate changes, where I'm scraping the bank's websites every single day because I'm watching like a hawk. When are those interest rates going to come down? And if we look at somebody like ASB's 1 year rate, it's actually quite interesting that we have seen some pretty large decreases.
Yeah.
So like if we go back to December, their 1 year rate was 7.5 and they've had 1, 2, 3, 4 cuts. So ASB over the last 5-ish months, they've cut their 1 year interest rate 4 times from 7.45% down to 7.14%. So it's a 0.3% cut. Now, look, it's not the most large cuts. They're not huge cuts, but it's a whole heap of small, slower cuts that are kind of telling you, well, they are coming down. They're not coming down massively quick, right? I'm not like super excited, like, oh my God, I'm saving so much money now that my interest rate has been cut by 0.3% from like 7.4 down to 7.15. But we are seeing cuts, right? They are coming down, but they're just coming slowly and they are gradual falls. And you probably won't notice it until they're kind of mid-sixes. But we are seeing cuts. That is the truth. But if we're actually thinking about how fast will the OCR go down, I was reading Tony Alexander's weekly report, and he was saying that he expects to see a cut in November in terms of the OCR, and then a couple of quick cuts in early 2025. Reckons it'll be about 4.5% by March. So that's some pretty fast cuts. So if you compare that to what the Reserve Bank is saying, by March next year, they think it's going to be, at the moment, 5.62%. So Tony reckons it's going to be about a percentage lower. Of course, it always depends on what economic data comes out at any specific time, because you might think what things 1 week and then new data comes out and you think, oh, well, that's not going to happen anymore. So you think a different thing a week later. But this is what we currently have. And actually speaking to Westpac's economists, they still told me they're expecting to see mortgage interest rates really start to ease in March 2025 next year. It does depend on what's going to happen in terms of inflation over the next couple of months, but they do think that we're going to start seeing the OCR go down probably about 5 to 6 months before the Reserve Bank is currently signalling. But just remember, everyone's interest rate forecasts are wrong. Mine will be, Westpac's will be, Tony's will be, everybody's interest rate forecasts are wrong. We're just trying to pick the right direction and guess, well, when might it actually start?
And I think one of the other things that Westpac said is that they reckon house prices might actually be up 5.7% this year. And a big part of that is that the first half of the year has been pretty slow for a lot of people, but they're expecting there to be a bit of momentum towards the later part of the year.
Yeah, and in fact, even if you Google house price predictions or house price forecasts OPAs, one thing that you can get updated at any one time is I actually pull out the all of the bank's most recent house price forecasts. These might just be 1 month out of date, but you can see, Westpac, last time I updated it a month or two ago, was saying 5.9%. ASB is still pretty aggressive. ANZ's pretty grim at the moment. They reckon 3%. But if you ever want a kind of up-to-date house price prediction, if you Google house price predictions OPAs partners or house price predictions OPAs, it'll be the first thing that comes up and you can see what all of the banks are predicting. Right, let's wrap it up there, but please don't forget to rate, review, and subscribe to the podcast. It really does help us get the message out to more people. And if you're listening to the audio version of this, you want to see some of the graphs that we are talking about, just Google OPAs Partners YouTube. It'll be the first thing that comes up. If you're watching on YouTube, make sure you hit the subscribe button. We release new videos on here every Monday and Wednesday. Thanks for listening to the Property Academy podcast. I'm your host, Steve McKnight.
I'm Andrew Nicol.
We're going to be back again tomorrow with even more daily strategies, tactics, and insights to help you get the most out of the New Zealand property market. Until next time.